back. Dominic, hello. Gabor, hello there. Yeah, it seems like we are going a little bit higher on NQ. I mean, we had a nice sweep previous day high, so it was kind of cool. Jake, hello. Hey, good to see you back. So it was a nice move. It was a nice move. What's gonna happen now, I wonder? Frequency in the flesh. It's confusing, you know. NQ is confusing because we're technically going sideways. Look at, I mean, despite the fact yesterday, so this was news here, all right? So let's forget that this happened, all right? That never happened, all right? There. It's not even, okay. Hold on. Bring to front. So it's not there. Despite that drop because of the news, we're technically just going sideways here. Sideways action. And that's it. That's what we have. So are we going to have any news today? Who knows? Who knows? I mean, we do have some news. I know. We have some news. Actually, let me check. We have some news. Hold on. Okay. The Empire. Okay. We have unemployment claims 8:30. Okay, red folder news, get ready. And that's it. FOMC member later on, but that's not important. All right. All right. Da-da-da-da. Let's see. Just a second. All right. Sorry, just some settings. I'm here. Hey, Terry is here. Oh my gosh, I was locked. I was reading. Hello there. Everybody, you know, stay calm, behave. Terry, she's doing her hair right now. So it's an important routine before day trading, you know. For me, it's super simple. I don't have to do anything with my hair. It's a routine, everybody. Hey, Martin, welcome back. Paray, is it better to trade before the bell? Sometimes we have some good setups. Raphael trades this year. Hello. Raphael, just saying I still have the note. You know, it's still here. I don't know if you can see it or not. 5K gold. Raphael trades. You see that? 2025 December 31. It's here. How you doing, Terry? Oh, sorry, you're doing your hair. Yeah. What's happening on gold? What's happening on gold, everyone? Damien, hello. Welcome. NQ Trend Sniper, good morning. Hello. Okay, so let's just summarize what happened here, all right? Because it's quite interesting. I just stopped the London session when we saw this move higher. So London session was not good. The only trade that I could have justified was this one, which I did not take. And the rest of it was just nothing, basically. Went up, swept previous day high, which is awesome. But I checked the 5-minute and everything, not just about the zone. Yeah, there was a minor zone here, but repriced everything. Took a small demand zone here, back in the middle. I'm just trying to figure out where to. So if we switch to the 1 hour chart, we just talked about, like, it's pretty much just ranging. So forget about that Microsoft news yesterday. That was definitely moving the market. But otherwise, we're just going sideways. Now, it gives me kind of a feeling, and for lack of any better word, but it gives me kind of a feeling that we could be popping higher to that 724-ish level. Now, we have a head and shoulders formation here. I mean, it pretty much looks like it, right? On the 1 hour. Now, I think, I don't know, Dominic, I have no idea. I mean, all we can do is an educated guess. Never forget that. So, 721.75 on the micro is the top of this shoulder formation here on NQ. And that's not a zone, all right? I just want to state that that's not a zone there. Let me check it on the 15-minute chart. Okay, it's not a zone on the 15-minute either. All right, so that could be a potential buy-side liquidity target, especially after we tagged Asia low and high. I'm expecting a bigger move. Maybe not at the 8:30 news release, all right? So let's just clarify that. It might not happen at the 8:30 news release. It might not be the thing. But if you guys have any other idea, let me know. I'd be happy to hear about it. So let me know about that. It's a little bit crazy situation. All right, Dominic took that long, Marcus. Oh yeah, Dominic is famous about, I mean, he can hold the trade for a week if he has to. Congrats, Dominic, again. Yeah, the 8:30 pop could happen. So again, 721. I'm not saying that's where we're going, but that's just the level we need to take notes of. So yeah, it's ranging. It's ranging. Yeah, I kind of agree with that. Right now, I think NQ is, well, not the best situation. I had a gold trade in between the two sessions as we went up to this 1 minute. That was off stream. As we went up to this supply zone on the 1 minute there, that was a nice trade. Otherwise, on gold, The more I look at it, the more it seems a little bit more difficult. I don't know. I feel like there's another supply zone on the 1 minute chart, but anyway, let's see. It's not been the most exciting. Yeah, it was not. How many points are you looking for a decent trade? Well, on NQ, even if I want to scalp, I need like 10 or 12 points, the minimum. But on a decent trade, I'd say if we can catch like anywhere between 20, 30, 40 points on NQ, that's good. But you guys have seen it here that in many cases we went for 50 or 100 points. Only with micros, of course, pare. Yeah. But it depends on the market conditions. Are we having enough volatility? You know, if the momentum is slow, if the volatility is not there, then maybe it's not the best idea to go heavy, and you have to go very low risk. Yeah, I think the best we can do is maybe try to wait for market open. Yeah, not much up there. Interesting level at or on gold, especially on the micro. All right, I'm gonna keep an eye on this level. Oh, it has been taken. Never mind. Oh, that was the one. Okay. Okay, that was the one. Oh, nothing else here. Gotta check the 3 minute. Wow, that's interesting. This is actually quite interesting. We have a textbook supply level on the 3 minute chart. I haven't even checked this one yet. Okay, this is great. This is actually great. Opening up this candle is at 42.42. Okay. 42.42. Okay, that's kind of a fancy number, but I like it. Oh, and it's not here. Well, actually here, sorry. 42.42. Okay. Okay. We like it. 3 minute supply zone. $42.42 up there. Okay, so I'm gonna be a little bit more bullish on gold. This is not that important. This is just a 1 minute supply zone. 1 minute supply zone there. And we have a 3 minute supply zone. All right. I like it. I like it. We'll see. 15 minutes trying to go through 13th of November. 15-minute candle and draw a CB. It's perfect. November 13, 15-minute chart. Oh, sorry, on NQ. Oh my god. Okay, on NQ. My bad, sorry. It is November 13, 2:45. You know why it's good? Because this here is also a supply level here. That's a really good 15-minute supply zone, which we're in right now. So, you know what I always say, supply zones meant to be broken, and also demand zones as well, but meant to be broken. The high of this one is 87.25 on the micro. So yeah, potential buy side liquidity there. Did we broke it? We broke it. Oh yeah. Sorry. Okay. Has been broken. Never mind. So that was perfect. I need a plan in futures to take trade, but in stocks, yeah, you definitely need a plan, Pari. You definitely need not just like an entry model, you need the risk management plan as well. That's also super important to have some sort of a risk management plan. Good morning, Victor. Good to see you back. How do you know, sir, if it isn't the zone area? Well, if it has been completely taken out, that's not valid anymore. But you just have to learn, Bordado, what is the supply and demand zone. I made a video about this, by the way. You can check it out. I uploaded it about 2 months ago. It's called Supply Zone, but not the way you think. You can check it on my videos. It's a 35-minute video, I think, but I explain it in detail what I'm looking for. So once, you know, you start to recognize it and practice it, you will know what you really want to look for, right? So yeah. Need to get some fresh air here. Damien saw the video, it's good. Thank you so much. Hey Bell, hello, good afternoon. Welcome back. How's it going? Good to see you. I draw it. We took it out. We took it out. Yeah, it was a nice move here. Oh, awesome! Thank you, Damien, for watching that. I'm actually already making the new videos for supply and demand zones and how you can categorize the different zones, which one has better possibility or lower possibility to trade. So it's kind of cool. I don't have a position on Kishan. I don't have a position. No positions. Hey, you're welcome, Damien. Thank you so much for watching it. Okay. Okay, funny thing. Actually, it's not that funny, but it is funny in a way. Yeah, so this is a demand zone on gold. Which means and we are right in the middle at midnight. Is it a good thing to enter a trade an hour before the news? Maybe not, right? Don't do this. Don't worry, I'm not entering. Not yet, at least. Okay, so the micro opened here. All right. Dang it. How far can this go? Can we see this going? I'd like to see a bullish move here, man. Okay, just a second. So I do have a short position. On gold. Small one. Only on Eval. Yeah, gold is in the middle. Not taking anything on the funded. Okay. Here. Slightly better. So this is the gold trade. All right. A little bit better. Slightly better. And NQ is not really doing anything. Oh yeah, I see that. I see the email, Dominic. Thank you, thank you. All right. So here's gold slightly going a little bit lower. 1 minute. Demand zone. Should be getting it, but who am I to tell? I think you said yesterday something. Oh yeah. There will be Discord invite. It's going to be uploaded with a video. There's going to be a video attached, or the invite link is going to be attached to the video. I know. I know. I know you're waiting. I know. I 100% know. NQ is not really doing anything. We're just gonna hover around here with gold, and we'll see how it goes. I have a Discord, but it's not too much is happening there, Martin, yet. I had to update some things, and the problem, actually not a problem, but the thing is with Discord, it's a good place to gather the community, because I just so grateful. I'm really grateful to have all you guys here in the stream, London and New York as well. We have absolutely great viewers here. And so I thought that, you know, with the Discord community, we can get a little closer to each other, speak, share information. So I'm not a guru or anything like that. The Discord would be to share info with each other, share some charts, thoughts about trading, have a trading buddy, you know. And obviously the Discord brings value only when there are, I mean, the Discord only good when it has some value. So the value comes from everybody, not just from me, by sharing setups, ideas about trading. And maybe I should do like short Discord sessions as well, but you know, there's only so much time throughout the day. Like I do the London stream, I stream in New York and do the My Funded TV segment. And I really want to put more energy into the Discord community as well. And of course, I have my IRL life as well, or IRL stuff going on as well. I thought that it would be a great idea to put some setups, forecast, or market recap analysis of what happened throughout the day or the week, or share some educational materials or stuff. So I still have to work on it, but yeah, I'm gonna post out the Discord link with a small video, and yeah, it would be great if we could have more and more people there. That would be great. What is the history of Fit Ninja? Oh yeah, well, it has an interesting history, to be honest. I was first, when I started trading, I was trading Forex. And obviously in Forex, you measure the distance in price in pips, right? In pips. So while I was trading Forex, let's go. So while I was trading Forex, I was also playing a lot of video games because I was streaming on Twitch. Not trading, I was streaming video games on Twitch. And so everybody was asking, hey Tom, by the way, do you trade? Because I told them I trade on the Forex. I was not successful, by the way, on Forex. And I was like, yeah. So I always told everybody during the Twitch stream, like, everybody's asking, hey Tom, how many pips you made today? I made 20 pips. I lost 50 pips. And everybody was laughing. What the hell is pips? Anyway, the other players who I was streaming and playing with everybody was saying, oh, here's the Pip Ninja guy. And so somehow this Pip Ninja popped out from nowhere. Like, you're the Pip Ninja, you know. And so it kind of stuck on me. So what I did back then is I booked the domain name. Don't ask me why. I think I wanted to build some Twitch streaming career on this domain name, it sounds hilarious. I know it sounds crazy, but actually I bought the domain name pip.ninja. So ever since then, I was using that domain name for my blog or for my community or whatever, you know, kind of. I was, it's not a huge money, just a few dollars per year. So I just kept it. And I still have some ideas with it, by the way, which I'm not going to talk about yet. So I kept the domain name, and so far I'm just using it. But I thought that it would be a little bit smart because I'm still kind of streaming, building an online business, digital marketing and such. So if I would keep it for a brand or for branding purposes, and that's how Pip Ninja actually stayed with me ever since 2018, by the way. So that's it. That's the story of Pip Ninja, basically. Yeah, there you go, Dominic. Recaps, ICT concepts, whatever. Yeah. Not fair. Yeah. Hey, thank you so much for saying that, Bordado. Thank you, thank you. Tix Ninja now? Yeah, maybe Tix Ninja. Yeah. Yeah. I by the way, I always liked to spend time with the community, just like with you guys here. So back in those days, and it was, but to think about it, 2018, it was not yesterday. 2018, oh my gosh. So I always had a good time with the community. I was not having too many viewers, like a few dozen viewers, which was awesome. I was not a big gaming streamer, but we were having some good conversations. I was always, you know, into this community stuff and building online social community and being here online. And that was partially the reason why I couldn't really step back completely from social media. So that's why in 2022 I stepped back in to YouTube, but by then I knew that I want to trade. I knew that I want to build my brand, my business, my income around trading, around the community, around social media. And in a nutshell, this is the story. So yeah, and I'm very grateful that we have such good people and viewers here. It's an awesome thing. It's better to trade alone, I tell you that. What did this 1 minute qualified as the demand zone? Oh. Yeah, so okay. I have a video, by the way, Pip Drunk, check it out later, but I can actually tell you why. All right. I can actually tell you why this one qualified. I have to zoom in. This is going to be in a nutshell, but I have a 35-minute video. Check it out. So a video link, if you go to my video page on my YouTube, the last video, it's called Supply and Demand Zones, but not the way you think or something like that. I'm going to paste it to you just a second. But I'm going to give you an example here. All right. I'm going to give you an example. Where is the drawn liquidity? This is okay. Let me paste that video here. Just a second. You got it? Okay. Check it out later. I'm going to give you an example on this 1 minute. Okay. First of all, number one check mark, and we might be a little bit more educational than usual, but yeah. First check mark. Actually, just a second. Oh, come on. Okay. So first check mark. We need liquidity. All right. So if we need liquidity, I got emergency rule. Okay, no problem. No problem, Dominic. So we need liquidity. A liquidity could be a swing low, could be a fair value gap, could be a swing high, of course, as well. So a significant area where liquidity is resting, okay? Even one single tick can change the narrative. In this case, and this is, by the way, this is a gem here, but I'm saying I worked on this for years, by the way. I don't want to brag about it, but okay, here's the sweep. In this case, sweep. We had the liquidity sweep. That's the first thing. In this example, we're going to use a demand zone. So for demand zone, we need bearish candles. Okay, never mind. Bearish candles pushing down and sweeping the liquidity here. I know it's only just a small little tiny wick. Hey Van Alvan, hello there. A small tiny wick, but this here is a swing low. And this bearish candle at 426 is sweeping orders from this swing low right here. Because they've been left there. Actually, let me change it. So again, that candle sweeping liquidity below this swing low. Okay. Now what do we need? We need a market structure shift. Okay. Or it could be also a continuation. Okay. Where is the market structure shift here? Right there. Bullish market structure shift. Bearish candles sweeping liquidity from a significant swing point here, shifting the structure. And this is not actually a criteria, but the stronger the move, the better. Now, minor details, which are also important. There can be no bearish candles until we are shifting the structure. Okay, so there can be no bearish candles on this push higher. Okay, these have to be bullish candles. Hey, the Punisher is here. Hello. So it has to be bullish movement. All right, no bearish candles here. Pushing. Okay, and the zone, the actual demand zone, starts from the first bearish candle's opening price. So not the wick, but the opening price, not the wick again. The opening price. So the opening of the body goes all the way down to the lowest point. That will be actually the top, the bottom level of this demand zone. If you ask me why not the wick, it has some ICT terms in it. This doesn't really matter. What matters is the body to start. This is a lower probability target, but I'm going to talk about that too later. So the zone starts from the body all the way down to the lowest tick of this bearish move. Okay, so that's the zone. And this, what actually qualifies as a demand zone, or ICT would call this bullish order block. I call it demand zone. Maybe ICT would be laughing on this one. I don't care. You can call it whatever you want. If you have a cool fantasy name for it, go with it. I don't care. This is the formation I'm looking for. Now, the stronger the move, the better the zone is. Okay, so in this case, I'm reverse engineering the... Yeah, I'm in the 1 minute right now. So I reverse engineering the process. I'm using this level. I'm using the whole level here as a potential target, right? That's the goal. So if you go to the right and extend this, you will see that the zone is starting at 42. Actually, hold on. Starting at 42.19.1. Right here with this wick. Now, what am I looking for if I want to go down here? Nothing special. I keep it super stupid simple. Very simple. All I'm looking for is just a shift in market structure to go lower here. Now look at this. I need a shift and the fair value gap. Look at this here. This was a stop loss. If I would have taken this trade right here, with a 1-to-2 risk to reward ratio, I would have been stopped out. Look at that, right up there. So I usually say that we can give like 2 chances to any given trade. In this particular example, this was the first chance. Hey, Volkspart, hello there. So this was a stop loss. I did not take this trade, by the way. Okay, swept liquidity, never mind, then went lower. There's still not a market structure shift here. Now, where was the first, let's just say, valuable market structure shift? I told you that we can go with the continuation as well. After seeing this sweep and the sharp reversal down there, look at this. It's not a perfect one, but it's valid. Look at the fair value gap here. This is an entry. So the second chance to enter, and this is where I entered this trade, is this one. TP down there. 1-to-2 risk to reward here. Boom. There you go. 1 loss, 1 full TP, 1 R reward. And that's how I trade this. I just explained it basically almost better than in the video. so this is what I'm looking for. This is exactly my bread and butter in trading. This is what I look for every single day. Always, no exception. This is what I look for every single day. Over and over, again and again. Let's look for something similar here. You know, the funny thing is there was nothing here in this session. Nothing. Was there something here? Oh yeah, here you go. This is an interesting scenario. The problem with this, so here's another one. All right, this is a supply zone, same criteria, extending it to the right. Bullish candles pushing into liquidity, shifting structure, market going lower, right? I tell you what the problem with this. It has been already mitigated once with no entry. So the market slowly grinded its way back into the zone. If the market already mitigated this level, that makes it, this level, a lower probability target. It can still go again, but it's going to be a lower probability target. So the market got rejected from the zone. By the way, it's also like a clear indication that the zone is valid, because look at the reaction. Whatever happened here, ICT calls this order block. You can call it order block, whatever you want to call it. Sorry, I wanted to pull the chart. So this indicates me, this move here, that there was something in this zone, something, orders, big players, whatever, something moved the market before the Asia session, or at least the bulls were not able to push it through. So anyway, once again they tried, and look at that, again they tried it again, pushed it down. But what can you do? What can you do in a situation like this? You can still use this area, even though it's a lower probability target. You can still use it as target. Let me show you how. There's a market structure shift here, right here. Bullish market structure shift. Beautiful candles here. Asia session, guys, Asia session. You enter here on the retracement to this fair value gap. This is your entry. You put your limit order here. You put your TP there. Boom. 1 to 2 risk to reward ratio trade. There you go. There you go. This is a 2. If you risk 1%, so just for the easy mathematics, 1% risk, 2% reward on this one. That is it. All right. Moving on. Went back down there. Look at what happened. If you entered here, this was a loss. Look at this. Shift. Limit order. Same trade. Here's your stop loss. Boom. That's a stop loss. Never mind. Let's extend it a little bit more. A little bit more, because somehow the market really wants to return into the zone. So anyway, still somewhat Asia session, pre-London. There you can do multiple things. You can be aggressive and you say like, okay, price went up there. Finally, we have some up close candles here. We shifted the structure. I want to be aggressive. I want to be super aggressive. I'm going to take a long position here because I'm up in Asia session. There's your 1 to 2 risk to reward ratio trade. 2%. Boom. Okay. Or you're scared. You still don't want to enter. All right. You're saying, it's still too early for me. Okay. But you see the market going up again. There's a continuation here. Shift, fair value gap, enter here, TP there. You're saying, okay, 1 to 2 risk to reward ratio. It's very close. You had to go in quite heavy for this position, so it was a risky one. It's a very tight position. It's a very, very tight position. But anyway, there's your chance again to enter the trade. Another. Eventually, the market, as you can see it right here, in this London session, the market finally the market destroyed this level. This is the point where this supply zone absolutely got destroyed. This is the end. This is not valid anymore. It's done. It's over. It's done. So what are we looking for right now? Nothing. If you see this, and I'm not even switching time frames, I'm just looking at the same 1 minute chart. There's nothing here. Nothing. Absolutely nothing. Right? Anyway. So nothing to look for. I don't see anything on NQ. But this was quite a good explanation even for myself. Yeah. I have to do not just a short. I think I need to do a much longer video about this. So yeah, sure. Rather than looking for market, I suggest you look for a sweep the recent low. Then yeah. That's by the way, Pip Trunk. That's even better. I thought about that too. So if you want to go with a much higher probability setup, then looking for those sweeps, that will actually get you a better opportunity. Yeah. 100%. It reduced the stops too. I agree. 100%. I agree with you. Yeah, it was super understandable. I mean, this was the simplest way that I could make you understand it. So getting back to this gold trade, now you see why I was looking at this level. down here on micro gold, right? Now, let me show you one more thing here. This is kind of crazy. This is where you can chop yourself up. So there's no holy grail. This strategy is definitely not going to save you or anything. Proper risk management. Hey, Vilkos, what's up? Have you tried kill zones pivots? Pivots not so much, but I will use it. Maybe I will look into it. Oh, nice. Will they let me take out $1,000? Not 1,000, but you can take out $865. Joseph, you have to leave 2,100 on the account, so you can take out 865. All right. I can confirm you $865 you can request. All the stuff's test all the trades you can avoid that. Yeah, exactly, Pip Drunk. I agree. Thank you so much, Pip Drunk. Thank you, man. Anyway, this is what I'm looking for, and this is how you can chop yourself up super easily, because if you apply every single zone, it's very easy to blow up your account. Let me show you. I love this next question. What do you see? Like ICT was always asking that. Anyway, what is that? That's a fair value gap, right? Let's zoom in again. Let's zoom in again. If we zoom in, what do we see here? Fair value gap. That's liquidity, right? That is liquidity. These candles are popping into this fair value gap and taking liquidity and then moving down, right? Clear. What is happening here? What is also happening here? Two times, actually. Bearish market structure shift. Another bearish market structure shift. Oh my gosh, two bearish market structure shifts. Kind of interesting. These candles are bullish, right? One more thing I forgot to say. This bearish candle cannot trade higher than the highest point of this bullish candle. So the highest point or tick or whatever of this bearish candle cannot be higher than the highest tick of this candle, all right? Including the wick. So it has to be lower. So what happened here? Liquidity, bullish push, market structure shift. So what do we see? We are seeing, and this is the lowest bullish candle here in this move. This is a, oh my god, terrible colors I have. Anyway, this is a 1 minute supply zone. We just found a 1 minute supply zone. Now, this is the easy way to chop yourself up. What do you see here? We have a 1 minute supply zone up there. Actually, it's valid. It's a valid supply zone on gold. Here's the problem. Went down, picked up orders from the demand zone, right? What else is happening? We're seeing a classic reversal here. Bullish market structure shift. We are seeing a fair value gap also down there. Kind of makes us want to enter the trade, right? And you're like, oh my gosh, look at this. The market is going to pop right up there and we're going to go back to the 1 minute supply zone. I want to be on this trade, right? I want to be on this. Let's put a limit order, which has been triggered, for example, here, because we're super aggressive. Two things you can do. 1 to 2 risk to reward ratio is the way it works the best in the long term. I know it's more losses. You would be stopped out of this trade, right? If you're using 1 to 1 risk to reward ratio, you could still be in this trade with a 1 to 1 risk to reward ratio. This is the big question here. Are you willing to forward test it, not just back test it, forward test it with a 1 to 1 risk to reward ratio? Or are you going for 1 to 2 risk to reward ratio? As you can see, if I would have gone in with a 1 to 1, I would be in a drawdown now. With the 1 to 2 risk to reward ratio, I would have been stopped out already. Nevertheless, let's just follow the price and see how this 1 minute supply zone is, or how the market is going to react to this area. Are we gonna go back into the zone? Kind of curious. Anyway. Daily Day Trade, what's up? Hello. Absolutely, you're welcome. You're welcome, Joseph. Good morning, Kevin. Hello. Kind of like it, but yeah. So if I would have taken this trade, I would have been stopped out. So even though I won a 2R trade, I already would have gave back 1R with this one. So this is when you gotta be selective and you gotta understand what is going on in the bigger context. What are we looking for? More chart time, experience, intuition, all these things come into play. But for the setup and for the target, I really love this. I really do. There's a volume imbalance. Rigged one, you have accommodate that into your, but yeah. True. There's a volume imbalance, yeah. True. This one here, right? So you could be putting a limit order down here. If you want to enter on the volume imbalance, I don't know if that's what you mean. You would still be in the trade with a 1 to 2. Yeah, exactly. So obviously that's a good add-on, by the way, Pip Drunk, because the volume imbalance is super important, especially when the market is like a little bit slow. It tends to reprice again this volume imbalance right here. So if you want to have a better risk to reward or better entry with a proper risk to reward ratio, you can still put a limit order. Now, one more thing. These kind of trades work better with limit orders because you can precisely plan your risk, right? So if I would have taken this trade at 42.20, we would be quote unquote swimming in some green. So I don't know, kind of interesting. Actually, you know, we can take it, but the entry is not gonna be good. Entry is definitely not gonna be good. What's the quantity? No, it's too late. I should have put my limit order at 42.20. You know what? I'm gonna put a limit order if it goes down again to 42.20. We don't have time. Sorry, I'm taking it off. Yeah, I just checked it. News are coming out. We don't have time. Yeah, sorry. New hour, exactly. It's more than 3 ticks, and he always gets. Yeah. I noticed that too, Pip Drunk. Volume imbalances are super. I mean, those like to attract the market. Anyway, we have unemployment claims here. Unemployment claims. Expecting more unemployment claims than previous month. How can we trade this news in Take Profit Trader? You can check with Take Profit Trader. How? Let me check it for you. All right. If you go into your dashboard to Take Profit Trader, next to your profile page, there's a calendar link. Let me show this to you guys. Here it is. You go and you check your calendar. If you don't see it in your Take Profit Trader calendar, then you can trade it. At least that's what support told me. Look at the previous month. Non-farm payroll, CPI. So these are the ones that Take Profit Trader forbids you to trade. Now, if you don't see it, then you can trade the news, if that's the question, right? I advise you not to, by the way. How do you use volume imbalance? I'm not using them as much. Volume imbalance can be used for entries or possible targets or anchor points for the market. I'm not using it strategically. I take a note that they are there. Maybe scalping, you know. You're welcome, How? So for maybe scalping, for example, you see that the market is going down super fast and there's a volume imbalance somewhere on the left, then there's a high possibility that the market is going to reprice that level. Okay, so again, this would have been a loss with the 2-to-1 risk to reward, 1-to-2 risk to reward ratio. But this is trading. This is how it goes. After a certain, I mean, by the way, if there is some certain amount of liquidity sweep happening at these levels, and it starts to reverse, there's a higher possibility, just like Pip Drunk said, there's a higher possibility that it can reach the target, right? So, but that's why sample sizing, I mean, when you're creating your edge, you need to collect the data, and that's why experience matters, risk to reward matters, position sizing matters. I mean, today I have taken a long position. Actually, I was late on the entry. Where was it? I was actually in a small drawdown. I don't know. I took it somewhere here. Somewhere here, I think. Earlier, a long position on one of my Apex accounts. Yeah, almost got me, I remember. I was lucky on this. I was lucky on this one. And it wasn't even in the kill zone. But I know it was super close to my stop. And so somehow I got lucky. And anyway. So now, on the 1 minute, we could see an inversion setup here. This is not really my type of setup, but maybe I will look into this more. If we have a candle, maybe not now, but next candle, or we can close higher than this fair value gap, then there's a good possibility that we can go back into that 1 minute supply zone. I'm not taking it, just saying. It's just interesting to observe. This is how it goes. Exactly. And by the way, there's one thing I will talk about this in my funded TV too. There is a misbelief in trading. Actually, I do need to write a sticky note here. Okay. There's a misbelief that you have to trade all day, from the start of London until the end of New York session, because that's when your edge is showing its potential. That's something that even more experienced traders are like got confused with. Anyway, I'm not in a trade. I'm not. No, I was having a short position earlier. We went down into that gold demand zone, and now we're just kind of gonna wait for the news. Exactly, Pip Drunk. Your mind is going to persuade you into those trades. 100% agree with that. It's the thing. Hey, you are welcome, Fangwoods. I Appreciate the kind words. Yeah. So your mind is going to chase you into those trades, and also, you got to understand, like, if you take like 100,000 trades until the rest of your life, you know, that's a long time, and quite a few trades. It should not matter that if you started an hour earlier to trade or an hour later in the same session, as long as you can, you know, as long as you can spot your setup. So you look back and you scroll through the day, and you're gonna see, oh my gosh, today I've missed like 6 setups. Oh, I could have made so much money. But that's not how it works. Anyway, it's all a game of probabilities. I can't express myself anyway. Yeah, so we are expecting more unemployment, which is kind of a bad news. Hey, no problem. Thank you so much, Pip Drunk, for being here. It was my pleasure. Thanks for dropping in. Have a good time. I need to go to the gym too. Have a good one. Okay. Yeah. The Survivor, hello. How you manage overtrade? Oh, well, first of all, there's the universal answer. You gotta have a stop limit, like a trade cap. How much trades you take a day, and how much loss can you deal with without feeling super bad. I mean, without feeling real bad, without, what is that profits or loss in this case? What is that amount of loss dollar wise, for example, on a funded account, that you can still like walk away with? Okay, everybody has a number because it's subjective. What is that number? You don't have to tell me. You have to, you know, tell it to yourself. What is that number that you're still able to walk away? If that number is very small, like you're even getting into an overtrade session by losing $100 on your funded account, then you are definitely scared and you have way too much emotions attached to the outcome. The thing is, you need to size down. So overtrading, you need the trade cap, you need a dollar amount. And follow the process. Oh my gosh, how to say this? Worst case scenario, if you can't leave the charts, switch to another account, or switch to a demo account, or ask yourself some questions right after the loss. That, were you following your risk management? Obviously the answer could be no, so then you need to know. I mean, there has to be some check marks, maybe literally in front of you on your desk, like, okay, here we have some red flags we need to stop. It's hard to stop, by the way. Until this day, the hardest thing for me, which causing me to lose accounts, is it's hard to stop. You know what? I'm doing very good to stop for the day if I'm in profit. If I'm in like $300, $400, $500 of profit on any given funded account, it's easy to walk away for me. I'm not greedy. I'm okay. If I make $300, easy. Let's go. We're done. But if I'm down $1,000 on a funded account, especially in a 50K funded account, if I'm down $1,000, that's my trigger point. I'm like, oh my God, I need to make it back. It's so subjective, you know. And based on my setup, I see a long queue. Well, for now, we need to wait for the news. One open. Set data loss limit and trade with key stream fund. Yeah, that's also a good thing. Hey, Content Hunter, what's up? Exactly. And that's not good. By the way, I can deal with a $300 or $400 loss on any of my funded accounts. I have zero issue walking away from that particular account if it's down like $400. It's fine. I can manage that easily. That's why I'm saying my number is somewhere around $1,000 on a 50K funded. Okay, just for the example. So for example, I'm up $1,000 on my new funded account, and I start the day and I give back that $1,000 to the market, which I made previously. That's when I'm getting triggered. I'm like, oh no, that's not good. So I do need to remind myself, if I'm down $300, $400, maybe $500, okay, this is it. We can walk away now. This is a number we can manage. Just let it be and come back tomorrow. And that's it. But it comes with experience. It comes with chart time. It comes with more intuition. But the good news, it's going to develop. It's a skill that it's going to develop. That's the good news. You're welcome. I have 20 accounts across prop, but I still want to trade all the time. If you still want to trade all the time, then that's an opposite thing which I'm having, because I don't know if that's because of greed or that's because you want to prove something to yourself or to someone else, or maybe to your family or whatever. Maybe that's an ego thing. I'm not saying it as a negative thing right now. Don't be offended about this. It could be a self-ego proving thing in your mindset, like you need to prove that you can make more, or you just need the money. Simply put, that, you know, I need to make a lot of money because, you know, that's normal. We are all thinking the same. You're the only one who knows what you want. What are my thoughts? 8:30. They're expecting more unemployment. More unemployment. More unemployment usually doesn't really mean that it's bad. Hold on a second. All right, I'm just putting it to my left here. All right. So the data, just a second. If you can make it past the point where you understand your own psychology. Exactly. Brian, that's also a key point. 100%. 100%. Yeah. That's why it's no problem. You're welcome, T Survivor. This is why I think it's psychology is super important in this. So strategy is like 10%, 90% is psychology. But yeah. So yeah, about the data. If better than expected, I would say it could be, it's showing that it would show that the labor market is still resilient. Okay, how do you pronounce that? I need to learn that. That word is my nemesis, really.
Resilient.
Okay. So that would mean that the labor market is still resilient. So no big wave of layoffs despite all the economic noise, right? But anyway, what it means for NQ. We all know that it tracks down the big stocks. We all know that. Resilient. That's, yeah. Resilient. So if the news are good, it would mean that consumers are still spending. So that's a good thing, right? You know, tech gadgets, apps, and all that jazz. So everything. Companies aren't slashing jobs. And the Fed might not rush into a big rate cut, right? That would be a thing, which keeps inflation in check without spooking the markets. So that could be interesting. The bottom line is we can expect futures to tick up or hold steady if the vibe is going to be like this, but you know. Yeah, so trade smaller for the funded account. The evaluation account, obviously everybody wants to get through with the evaluation account as soon as possible, but I would say trade small, exactly like Brian is saying. And once you know your goal on the funded account, especially if you have losses in the past 3 years, your number one goal on the funded account is to build your confidence. That's what you're working for. You're focusing on the money, and you're focusing on the profits and the 20 accounts, which is awesome. But I think you might be focusing too much on the outcome, on the profit. You should be focusing on the confidence, on your conviction in your trading model. And that's only possible if you're having more good setups. Forget about the profit. Focus on the setup. If you're having, you know, wiser entries, I'm not saying better setups, but like you're focusing on your edge. You're focusing on your trade analysis. Your confidence is gonna grow. Your conviction in towards your trading model is going to grow, and you're just gonna get better. It will be easier to take losses, and that's a journey. So you spent 3 years already. Why not spend another few months just by applying this simple small thing? By trading small. Anyway, just my 2 cents. Past 3 years, it's my life. No. Everybody has a journey. Everyone, frequency, everyone. It's just the way it is. Don't worry. Oh my gosh, look at that. Are we gonna go back to that 1 minute supply zone on gold? Now, if we really want to be do I want to log into my paper trading account? Let's log into the paper trading account. All right. All right, this is just paper trading, everybody. Paper trading. TP. Up there. Okay, so this would be a possible entry based on the fact that I told you this is paper trading again. It has nothing to do with anything. It's just to see how it goes. We have news, so this is just for fun, just to see if it wants to spike up there to that supply zone. We get twisted because we watch others. Exactly. By the way, Brian, I think one of the most toxic things in social media, it doesn't matter if it comes from a prop firm or from a guru or furu or whatever. I think one of the most toxic things, that one of the most like setbacks that you can, I mean, that causing you to have the setback is the influence of other, most of the time furus, I call it furus, fake gurus, by posting out the $100,000 trades or $1 million accounts, or they are posting out that we are making $50,000 every single day. But you don't know many other data and information. Maybe that guy or gal is really good. Maybe that person is really good in trading, but you don't know how that person got there. Your subconscious is trying to compare yourself to that person, like, oh, he's making 50K. I'm gonna make 50K next month too. You don't know that person, how many years struggled, how much money he or she spent on prop firms or personal cash accounts or whatever. So completely different journey. And I'm not saying everybody is a scam, because obviously there are some real good traders out there, but comparing yourself because you're seeing those profits shining there in social media, oh my gosh, yeah, that's a very bad thing. That is one of the worst things, that it's affecting your mind in the worst possible way. It's awesome, don't get me wrong. It's always good to see that, hey, at least it's proving that it's possible, right? But otherwise, everybody has a different journey. That's why it's so subjective. Oh yeah, TP. Awesome paper trade. You know. There you go. I have met with a successful trader. He's not on social media, by the way. He is making solely a living, not from affiliate money like I do or many others. Obviously, I'm already making a living from payouts as well. Maybe not with the Lambo, but at least I can pay my bills. But the thing is, I know a guy who solely makes a living from trading. He's trading Forex and swing trades. So different type of trader. He told me the biggest thing that helped him to become the best trader he could be, he not just deleted all his social media accounts, he completely deleted the applications from his phone, from his computer. He closed down his Facebook account. He closed down his X account. He closed down everything. He does not have any social media, nothing. He don't even know what the heck is going on to the prop firm space right now. He's trading his own personal money, and he is successful. Believe it or don't believe it, I don't care. He's making a substantial amount of money from trading every single month. And he don't want anything to do with social media. He doesn't care. Everything changed when he pulled himself out from social media, deleted everything, closed everything, and that's what he told me. That was the turning point for his career, and he stopped using social media. Obviously, he's still watching the internet and reading the news, and obviously, he's not living in a cave, but no social media. Okay, so we have the news. What's going on? NQ. Let's see the number. Let's see the number. Oh, wow. Less unemployment claim. So better than last month. Okay. Less people filed unemployment claims. I know. It's growing real fast. I don't know what to do with this. Furu, yeah. Okay, so not much happened. Yes, something like that. Daily day trade, yeah. Less unemployment means rate cuts not so much necessary, even though the Fed said that we can expect. But last time Jerome Powell said like maybe they will see, but maybe they will be a little bit slower on that rate cut. So just like you said, day trade, the markets love the rate cuts. No rate cut, not good for stocks, at least, you know. Good analysis, by the way. But yeah, Jerome Powell was actually, it was not now, it was like 2 or 3 weeks ago, I think. He said that, you know, before that, he said that we can expect maybe multiple rate cuts. So that means at least 2. One already happened. Maybe we have one more. But after that, he said, you know, maybe we'll just take it slow. Let's see what the data show us. So now they see the data and they say, you know, maybe it's not yet necessary in December. So let's just wait until January. The market sees that. And of course, okay, let's go lower. The thing is, Majowa TV, just like with the technicals, there are also multiple versions how we can interpret these fundamental news. I'm telling you, out of 1,000 quote-unquote experts, at least 50% would say what we just said with daily day trade, that it's going to be bad for the market. The other 50% can come up with a different narrative, like, well, it should be good for the market because it's going to go up, because there's so many ways. I'm actually interested in the fundamentals. Maybe I should learn more about that, but it's also like technicals. We can trade so many different ways. I'm seeing a supply zone, you're seeing something else, or vice versa, or I'm seeing it as a target, you're seeing it as a stop loss. I don't know. So anyway, this is what it is. I'm not gonna take a trade on this. There's no level here, nothing. Okay, everybody, I think I'm gonna cut it here, because I'm just not gonna take a trade, and I'll be at MyFunded TV shortly. All right, thank you so much for watching the stream. I think we had a good chat, and I'll be back for tomorrow London session and New York as well. Thank you so much. If you would like to support the channel, I would highly appreciate it. It really helps if you guys use the TOMSABO code for all these platforms, even MyFundedFutures. I know that's not giving you a basic discount, but gives credit for me as well and for the channel if you type it in or click on my links. Thank you so much. We have some good sales. Thanks for the support. God bless you all, and I'll be at MyFunded TV. Cheers, everybody. Cheers. God bless.